Hi, good morning. I'm Bert Nussbaumer from macrobeat.co.uk. Well, Friday, and thanks God it is Friday, we had a very long week again with a lot of weak data all around where we take a look a little bit later on through the slides. We had obviously the FOMC meeting, we had the ECB meeting, which in itself was not really producing that much new. It's been really more of what we would have expected, very dovish central bank meetings, promising to do whatever it takes. And in the case of the FOMC, obviously Mr. Powell already highlighting that there's probably more to come in terms of from the Fed as well as from the government in terms of stimulus. But equities rallied during the FOMC, which sort of puzzled me a little bit. I watched Mr. Powell, and I sort of knew him from the past before he was in his current position. And if you listen to him, he did really not speak that upbeat at all. I think he made very a lot of references to how bad things are, how bad things will get, and almost like a question mark on how quickly we come back from it. So reality is I don't really did hear anything about a V-shaped recovery in Powell's press conference, nor in the Q&A, rather the opposite, whether it's W or whatever else, but definitely not a V-shape. I think the equity market since then has really picked up a little bit the idea that maybe that disconnect between the real economy and the Wall Street just cannot continue as it happened. ECB pretty much the same, promising a lot. I guess we still need to hear more from Brussels in terms of what kind of stimulus we have. And last but not least, we had Mr. Trump again yesterday looking for a scapegoat and try to save his election by pointing the finger at China and actually use the word tariffs again for the first time, which the equity market obviously didn't like at all. Without further ado, we quickly go into the charts. On the first slide, we have the US GDP number for Q1, which you're all aware of, 4.8%, which obviously is only half the truth given that we didn't really get much of the current shutdown into the Q1 data. We have on the next slide, and maybe you have to sit down for this one, we have the projection of Q2 GDP, which one house like Oxford Economics is seeing somewhere near minus 40%. Whatever it's going to be horrendous. Obviously, we do know this is due to the shutdown, and obviously the numbers will not stay there. But the question is really how much is it going to bounce back once the economy starts to open up again, given how slow the opening up process will be. On the next slide, we have what will be the key in the next few months, which is US personal consumption. We took a real hit on this survey this week. If you think about personal consumption, or the consumer makes 2/3 of the US economy, you really want this number to bounce back as soon as we start opening up the economy again. But this will be the one indicator to watch to understand how much the US consumer was hit, how quickly he's come back, to do with confidence, and possibly, obviously, as well, whether how many people will find a job again. After the claims data this week showed that we have now over 30 million unemployed in the US in the last 6 weeks. So rather scary times indeed. That brings me to the Dow Jones. I showed this yet again. I know it's always the same, but we had a serious test of this broken 4-year trend line yesterday. We briefly traded inside of the old uptrend, at least intraday, but we didn't manage to get it into the close. And so we have had this big test. We have that big failure. And I really think that sort of 24,600-700 area will be the top for some time to come. And I still feel we're going to get a 10-15% move back down in equities, which is not going to be a panic type of move. I just think we're going to go sideways to lower over the next few weeks and months, really, to adjust to the real economy. Last but not least, the dollar index, we finally do make some room on the downside, breaking the 99.30 level on the DXY. If we continue to close down here, I would expect the dollar really slowly starting to roll over and probably, finally getting the move done that we were looking for all this time. Possibly a 5% correction in the dollar on the downside, possibly a little bit more. This is it from me this week. I still hope I will be the next session will be a more positive one, but sadly the data will just come in as it comes in. And I wish you all the best. Thanks very much indeed. Bye-bye.